Piyush, thank you so much for joining me. So, we're going to go on a little journey and your digital journey and DBS's digital journey in the last decade or so. So, tell us about where you started thinking about technology in a very applied sense, and then we'll talk about how it fits into the context of artificial intelligence and what are the kind of problems it's going to solve.
Well, we're going to start with my own background. So I used to work with Citibank, and in the late 90s, I started fooling around with a lot of the first e-commerce platforms in Asia. In 2000, I quit banking for a year and set up my own .com in Delhi, actually, with the Hindustan Times people. So I had some affinity and some
What was it called?
goforai.com. So we sold it. HT Online today is what we created at that time. It didn't work, by the way, .bomb rather, .com. But so I had some background. In 2012, two or three things happened. We've been trying to grow our business around the region through the traditional brick and mortar ways. And I found that SME and consumer banking very hard to scale. I also found that the financial services value chain was beginning to get unbundled around the world. But perhaps most important, I had a seminal meeting with Jack Ma at Alibaba. And it caused me to think that these guys were redefining how financial services would operate. They had 3 million SME customers lending. They had 300 million consumer customers, again, borrowing customers. They were raising money through Yurbao. They were moving money around. They were selling insurance. And they had zero branches, zero salespeople, zero paper. So, they were a bank to all intents and purposes. So that caused me and my CEO to sit back and say, hey, if the tech companies can do it, it will happen. And why could we not do it? Today technology is open source, is available. We have domain knowledge, so we could leapfrog. We are somewhat lucky that we hadn't got impacted by the global financial crisis like a lot of the Western banks. And because we hadn't, we could focus on the future instead of focusing on the past. So 2013, 2014, we were very early in the transformation game. We set up a program of change, which was architected around three pillars. The first was the technology re-architecture. So very early, we moved to microservices and an API-centric technology. So we set ourselves 4 years to really completely change the nature of our infrastructure, move from the mainframes to x86 server farms, etc., etc. We created our own virtual private cloud. And so one was the tech pillar. The second pillar, which is actually quite germane to this year's Nasscom, we figured that it was finally about the customer. And you had to be customer obsessed, not just customer centric, but customer obsessed if you really wanted technology to make a difference. Like I told my people at that time, you can argue that, Uber became Uber not because they used technology, but because they reimagined the job to be done. Airbnb, it's not like Ritz-Carlton didn't have technology, but Airbnb reimagined the job to be done. So you really had to be customer obsessed and think about the human agenda behind technology if you could. And so we really doubled down on this whole idea of customer journey, customer thinking, outside in, to leverage technology in a very different way. And the third pillar was the culture change. We figured if we wanted to compete with the Googles and Amazons and Alibabas of the world, you had to believe you're a tech company, because you have to make sure that your people feel part of the change. They cannot be a set of people who think change is happening to them. They must believe they're driving the change. And then you get really superior outcomes, right? So we started the journey then, and we started getting, fortunate. In 2016, we were recognized as the world's best digital bank. And since then, we've been, recognized that way for several years in a row.
Right. So, you talk about Alibaba and you talked about the fact that, they have so many millions or hundreds of millions of customers, they have vendors and there's money flowing back and forth. But at the end of the day, they're a e-commerce company. Now, you are a bank. Your job is also to keep deposits of your customers, large and small, safe and answer to regulators. So how do these two worlds collide at all in the ambition to be more like a tech company versus the traditional responsibility?
That's a really good question. Frank, if you ask me, when I look back, what has the biggest challenge been? It has been that. How do you get the balance right between the fiduciary role you play as a bank and the regulated nature of our industry, but on the other hand, trying to be a tech company and be in the context of the customer? I'll start with a fundamental principle that nobody wakes up in the morning saying, I want to go banking, So people want to do different things with their life. You don't need a mortgage. You want to buy a house. You don't need a credit card. You want to pay for your meal. And so if you start with that first principle that people actually want to do different things with their life, and then you figure how do you embed your banking products in what people want to do in the context of what they want to do, you start thinking like an e-commerce company. Very early we started saying our role is to make DBS invisible, embed ourselves, and today it's called embedded finance. So this was way before it was called embedded finance. I wanted to be the Intel inside of banking, right? And so you go and put this thing out there. And in working with that, there were two or three things, the balance on the other side. One was the regulatory environment. So what would regulators let you do? But the second was the trust environment. So how do you actually make sure that you don't get to a stage where customers stop trusting, either because of fraud, scam, cybersecurity, and crime? So, and sometimes they coincide, the regulation and the trust environment. On the regulatory front, we were fortunate that regulators, by and large, in Asia have been willing to lean in. They've been progressive, and they're willing to actually, work with the banks to find constructive solutions that allow the industry to progress. And we're fortunate because when you compare the regulatory response in our part of the world to the West, quite different. The regulators in Asia are willing to work with sandboxes. They're willing to work with experimentation to say how do you get the best out of the technologies and not while not throwing the baby out with the bathwater. And so we got fortunate that many of the experiments we did were actually with the regulators. In Singapore, where we're headquartered, the MAS, Monetary Authority of Singapore, created something called a Financial Center Advisory Panel in 2015-16, where they got the e-payment companies, the banks, the regulator together, and we get together every 6 months to think about how we could leverage technology differently. So that was actually quite helpful. But the bigger challenge was this issue around trust. And trust has many dimensions. The first is just resiliency. So the customer's expectations are now driven by Google or by Amazon. They want 24/7, they want instant, and therefore you need a very high degree of resiliency. And actually, this is one of our lessons. We didn't get that right. And so, we ran into a state where we moved to the new architecture without recognizing the operational complexity it involved. And so we had to go back and, course correct and so on. So you need resiliency. But on top of that, you need to be very concerned about cybersecurity, right? So in the old days, if somebody frauded a customer, it was one customer at a time. Today, if somebody gets in, it's a million customers at a time. So thinking very hard about cybersecurity, peripheral defenses, firewalls, and then increasingly, we have a mantra which says somebody's going to get in. And therefore, I call it inside is the new outside. You got to assume somebody is inside, and then you got to figure how do you catch the perpetrators. So using AI, microsegmentation, data, this thing, orchestration, use all kinds of technologies and techniques to create customer trust. But on top of that is this whole new world with scams and frauds. I mean, people are constantly, and now with AI, deepfakes. So we're constantly trying to figure out how do you use technology to police technology. You can't do it by human beings alone. And it's a constant cat and mouse game, But if you don't, program for that, you will lose the battle.
Okay, so I'm going to come to that deepfake and those challenges in a bit. But tell us about how you look at consumers in terms of the way you're trying to understand them today. And since we are in a technology conversation, using, let's say, the kind of AI that is available, and to what extent does it even help you do that? And the second sort of supplementary question, if I can add to that, you work in 19 countries. So are customers different, in completely different, somewhat similar? How do you mind the similarities and then work on the dissimilarities as you do this?
All right. So first of all, this whole idea of embedded finance and being able to predict what a customer really wants, AI is a massive game changer. So we got on the AI journey about a decade ago, more than that. We were the global pilot for IBM when they came up with Watson. And so we were the global pilot for wealth management. And didn't work that well at that stage. I was getting accuracy rates of 85, 87%, which are not good enough to take to market. NLP hadn't advanced to the level that you would like it to be. Unstructured, PDFs, graphs, you couldn't read that kind of stuff. But fast forward, over the next few years, we learned. And 2017, we started scaling up predictive AI in a big way. We created our data lakes, created a whole bunch of data access protocols, etc. We started creating models. And we found that we've been able to get really superior outcomes in using AI to be able to predict and to be able to help customers in the servicing needs as well as the sales process. So let me give examples. a human being, we've got like 20 million plus minus customers. I have X number of RMs. So by and large, you can handhold and deal on a relationship basis with a handful of customers. The rest of them are, faceless. But with AI, they are no longer faceless. You can start dealing with a customer, a segment of one in a relationship way. The amount we actually know about customers is massive. I have unbelievable amounts of data, what you do. I can tell you, for example, with high degree of accuracy, what restaurant you're likely to go to in the next month, because the data can tell you that. It shows me what you like, but individually I can't do it. So AI can help a lot. So we started building a lot of AI models. Today we have 1,600 models driving the bank, 400 different use cases. We send out 50 million nudges in Singapore alone with 5 million every month. And those nudges help you figure, hey, this might be a duplicate payment. Hey, you're paying too much for your electricity bill. Or by the way, you were reading about gold and this is a good time to go and maybe buy gold. And this is all powered by our AI engines. We're finding engagement rates are up, satisfaction rates are up, our response to our marketing nudges are up. 3-4 years ago, I started doing A/B testing to capture the economic impact. We run an A sample without AI and then the rest with AI. This year, we'll make over $1 billion of economic delta by use of AI and AI models. So without doubt, it's been a game changer in terms of our ability to predict and be able to facilitate customers in terms of what they need. And that's frankly even before Gen AI. I think Gen AI is, turbocharges it to a different level.
Right. So you're also saying, therefore, that customers have a great degree of similarity. I guess we know that, but from your vantage
That was
point,
the second part of your
Yeah,
question. So, it's interesting. I think our 19 countries are mostly in Asia. I find there's a lot of cultural similarity in Asia. The big difference between Western liberal thought and Asian thought is the primacy of the individual and data primacy relative to the role of community and society. And I'll tell you an interesting anecdote. When COVID happened, in the first day, we had the first COVID case in February. My data analytics and people came and did the usual networking analysis. And we were able to tell using the door tap data and QR codes, the people who might have been in touch with this person. And our employees loved it. I did an op-ed in the Financial Times saying how we'd use data and analytics to be able to decipher who might be at risk. I got flamed in the Western press because for them, the notion that I would use employee data was unconscionable. Whereas all my employees in Asia loved the idea because it was a community service. So that difference is a real difference. But in Asia, I find whether it's the Chinese or the Indians or Southeast Asians, the sense that you can use data constructively with safeguards and you can do things is actually quite common. And so we've been able to find a lot of ability to success transfer across most of our countries.
So as you apply AI now to, let's say, real world consumer needs, perceived needs, because you're obviously trying to pull them out even before they think of them. What are some of the interesting use cases and how is it scaling up? And then I'll come to India as well.
Well, if you go back with general AI, I said, so you take the mortgage journey, right? So typically people come to us to take a home loan well after they've chosen the house, well after they've decided, and then they shop for the mortgage rate. Whereas if you do embedded finance, you can start engaging with the customer 6 months ahead of time. Why? Because your AI, robots and engines can start figuring and sensing this customer might be interested in looking for a house through all the other data it puts together. So you start engaging with the customer much earlier. And then you also start figuring from your AI engines what the customer is likely to respond to. Is it likely to be a service that helps them find the house? Is it likely to be a better mortgage product? AI engines determine all that and decide when to approach the customer, what kind of offer to give the customer, how to engage the customer. It changes our customer engagement and relationship quite considerably, as an example. Right? As you go forward today, we're finding that with Gen AI, because you can deal with unstructured data, anything I read, synthesize, create output, the computer does much better than individuals do. We're already finding the impact of that to be really helpful. So our call centers where customers used to call us, we had chatbot over some years, but now with Gen AI, it's just a completely different level of engagement with the customer. The customer is getting more and more comfortable asking the questions. We have an enterprise knowledge base in the back. The Gen AI tool goes and engages with the customer much better than our agents, physical agents can. So again, the customer satisfaction engagement levels are improving quite dramatically. We use it for other stuff as well internally. We're using AI for hiring. We have something called Jobs Intelligence Maestro, which actually predicts what kind of salespeople or what kind of computer people. So we use it for hiring staff. We use AI for onboarding customers. Our underwriting process is no longer based just on financial statements and cash flows. We predict what kind of customers we could bring on, and so we're now able to reach customers who we would normally not be able to reach. So all of these are use cases that we're being able to leverage.
So is AI then, to that extent, resolving business challenges or improving your business outcomes better than perhaps what was this thing, or is it to expectation, or it's still there's some gap?
No. So it's without a doubt, resolving challenges is much better, but there is still a long way to go. So when I look even at the predictive AI, I tell people if you look at the scale of 10, we think relative to the banking universe, we are top quartile. But compared to what a Facebook does or Netflix does, we are 3, and these guys are at 8 or 9. So there's a lot more we can do. With Gen AI, the real trick is going to be to reimagine business models. So far we are getting productivity within existing business models, but you're going to have to rethink the way work is organized. You're going to have to rethink organization structures. You're going to have to rethink how you go to market. Gen AI gives you tremendous capability to outsource to the customer. So you don't even have to do the work. The customer will do the work for you. But it requires you to put on a fresh hat and say, how could this be completely different? So I think we made progress. It's much better than it would have been without AI. But relative to where it can go, we still have a lot of work.
And when you say outsource to the customer, is it like how I'm printing my boarding pass at home and then going to the airport?
It's sort of like that, but one step beyond. In the future, I can see an AI model bank. So every customer has their own bank. And the bank itself is built and driven around AI, and you basically deal with your own bank in your own way, right? You can get to the stage where, a large part of what we do could be renowned. This could take 3, 5, 7 years, but you can get there.
So how are you, where do you get these thoughts from? As in, when you think of something like this, what's the inspiration?
Well, it's a lot of it is, reading and talking to people. And I talk to people like yourself and read a lot. But more than that, we have two things. One is we have a very structured innovation process, which we institutionalized some years ago. And so we innovate at 4 levels. Obviously, there's the bottom of the pyramid, the old suggestion box, except it's all digitized. And then we have something, we run the bank through journeys. So we have 63 journeys, and we don't run the bank vertically anymore. We run horizontally. Every journey lead and cell is charged, it's like agile at scale. But every journey lead is charged with coming up with innovations that make their journey superior and better. So they come up with ideas. Then we have some tech platform. Let's say payments is a platform. That's the third level. They're charged with imagining the future of payments for the next 3, 5 years. So they'll come up with their own thinking. But what's really important, at the top of the house, we meet every 6 months. And there, based on all of the research and so on, we make 1 or 2 big bets on where we think the future of the world is, right? So we made a big bet on AI some years ago. 3, 4 years ago, we made a big bet on tokenization and the digital token economy. So we one of the first regulated entities that created our own crypto exchange, as an example. So we use all of this to try and program for some of these ideas. And
What's the latest bet?
actually, we're still doubling down on Gen AI. Like I said, I think the scope is huge. And similarly on crypto and the digital economy, I mean, it's a good start, it's a good business. We made 30, 40 million bucks on it. I think that could be much, much larger. So we're just currently focused on these 2 areas to drive scale and scope.
Right. And crypto, of course, is not in India, and regulators look at it a little differently here. But
Well, you got to think about it's not crypto is one part of the use case. The real thing to think about is blockchain and digital assets. So I think everything is going to be digitized.
Yeah.
And the real power of a blockchain digital asset is you can program. So in Singapore, for example, with the regulator, we are running something called programmable money. And so when you actually do it's a smart contract. And the contract embed the program, and that only comes into effect if certain conditions happen. That changes the back office structure completely without cryptocurrency.
yeah. Right. Tell us a little bit about India. What are you thinking of here? And are you happy with the way things have progressed?
Well, we are actually finally quite pleased. We tried to do, it's an interesting thing. In 2016, we launched our first digital-only bank in India. It was intended to be only on a mobile phone. And we learned some hard lessons in the first 2 years. first, like everybody, we put on 3 million customers in the first year. But when you looked at it, you realized that these are eyeball kind of customers. You could never monetize these customers in 30 years, right? The people who are the young kids who were basically gaming you for the freebies. So we had to course correct a little bit. We also realized something about the infrastructure at that time. So pure mobile doesn't work because you keep losing signal. So we had to add a desktop internet capability to supplement the mobile. But even after that, we realized that for a country like India, you probably need phygital and not just digital. You still need trust and you need brand relevance. We have 500 branches in 350 cities, coupled with our digital capabilities. And now we're getting some really great outcomes. It's our fastest growing business anywhere in all our 19 countries. So very, very positive about the India situation. We used to be a large corporate bank, but now we're getting scale and scope in both the consumer business and the SME business, if you will. Obviously, the digital infrastructure in India is superior and it helps. The Aadhaar stack, it helps. I mean, the India stack helps. The e-commerce agenda helps. The payment rails help. So we're being able to leverage that very effectively to turbocharge our growth.
Okay. And any specific India objective or plan for the next year or so that,
Well, there's no objective plan for the year or so, but I think the right thing to think about is
or
for us,
product that you may want to bring in?
we'd like to be an embedded local bank in India. So the difference between us and most other foreign banks is we are trying to be another Kotak or another, HDFC. So our ambitions are very different from the typical foreign bank ambitions. And we are happy to play the long game to get there.
Right. That's a good note to end on. Thank you so much
All
for
right, take care.
speaking with me.
Happy to do this.
Thank you.